You're probably learning how to invest from TikTok right now. And that's exactly what's keeping you broke. Only 38% of Gen Z can answer basic financial questions correctly. Baby boomers score 54%. That means your grandfather understands money better than you do. Let that sink in for a second. Not your parents. Not your older cousin who gets money. Your grandfather. The generation that grew up without apps, without robo-advisors, without a single finance influencer telling them what to do with their paycheck. They still know more about money than you do right now, today, in 2026. And here's the part that stings the most. You're not lazy. You're not careless. You're on your phone all day watching finance content. You've got 3 budgeting apps installed that you check more than you check your actual bank statement. You talk about crypto with your friends like it's a second language. You know what a dividend is. You know what staking means. You've probably watched a 45-second video explaining index funds more times than you've had an actual conversation about your own savings account. And despite all of that, despite being the most digitally plugged in, most financially aware-looking generation in history, you are still, statistically, the least financially literate generation alive. So the question isn't whether you care. You clearly do. The question is, why isn't any of it working? Here's why. You're getting information. Plenty of it. Non-stop, actually. But you're getting it from the wrong places, and nobody ever taught you how to tell the difference between advice that's accurate and advice that just sounds confident. 70% of Gen Z learns about money from TikTok and YouTube. Not from a class. Not from a bank. Not from a parent sitting them down and explaining how credit actually works. From a 15-second video with a trending sound behind it. Third of you say social media is your primary source of financial education, not a secondary source, not a supplement, the primary one. And when you're not getting your advice from a stranger on your For You page, you're increasingly turning to AI. 29% of Gen Z now uses AI chatbots to get financial guidance. Compare that to baby boomers, where the number sits at just 8%. You've essentially replaced the family accountant, the bank advisor, and the high school teacher who never existed for you in the first place, with an algorithm. And that would be fine, genuinely fine, if the algorithm were reliable. It's not. A study on AI-generated answers found that nearly half of them, 45%, contained at least one significant error. Not a typo. Not a rounding mistake. A significant error. Which means almost every other time you ask a chatbot how compound interest works, or whether you should pay off a credit card or invest first, or how a Roth IRA is taxed, there's close to a coin flip chance you're being fed something wrong, dressed up in a tone so confident you'd never think to double-check it. So think about what that actually means. You are building your financial future, your first credit score, your first investment account, your first real decision about debt, on a foundation that nobody verified. Not a teacher. Not a licensed advisor. Not even a fact-checker. Just whichever creator's video the algorithm decided to show you at 11 p.m. while you were scrolling in bed. And this isn't some small, forgivable knowledge gap. This is not, oh, I don't know a fun fact about the stock market. This is costing you real, actual, take it out of your pocket money. People with low financial literacy lose an average of $948 a year, not from one bad decision, but from small leaks. A subscription they forgot to cancel. A high-interest card they didn't know they could negotiate. A savings account earning basically nothing while inflation quietly eats it alive. $948 might not sound massive on its own, but stack that up over 5 years, 10 years, and you're talking about a down payment. A safety net. The difference between panicking during an emergency and calmly handling it. And it gets worse the lower your literacy score goes. If you score low on financial literacy, you are twice as likely to end up debt-constrained, meaning stuck, meaning unable to make the moves that would actually improve your situation, because you're too busy servicing debt you didn't fully understand when you took it on. That's not a character flaw. That's what happens when nobody teaches you the rules of a game you're required to play the moment you turn 18. And look at where that's already showing up. 42% of Gen Z is living paycheck to paycheck right now. Not because you're bad with money. Not because you spend too much on coffee. That's a lazy explanation and you know it. It's because the cost of living outpaced the income you're bringing in, and you were never given the tools to build a buffer before the pressure hit. Nearly half of you point to the cost of living as your single biggest barrier to financial success. This isn't a personal failure playing out one person at a time. This is a systemic gap playing out across an entire generation, all at once, on a scale big enough to show up in national surveys. Here's something else worth sitting with. Insurance is the single weakest area of financial knowledge for Gen Z, weaker than budgeting, weaker than saving, weaker than almost anything else that gets tested. And that makes sense, because nobody's making TikToks about deductibles. Nobody's going viral explaining the difference between a copay and a premium, or what happens if you're underinsured the one time you actually need coverage. It's boring. It's not aesthetic. So it gets skipped, right up until the moment you desperately need to understand it, and by then it's too late to learn it casually. Now here's where I want to stop and give you something real, because piling on statistics without giving you anything to do with them isn't fair, and it isn't the point. You are already trying. That part matters, and it's true. 66% of Gen Z is actively saving money right now. That number is up from just 2 years ago, not down. Nearly 70% of you have taken real, concrete action in the past year to deal with rising costs, cutting back on eating out, skipping events with friends to save cash, picking up a side hustle when things got tight. 81% of you say it's genuinely important to you to be seen as financially responsible. That is not the profile of a careless generation. That is the profile of a generation trying its hardest with a broken map. So you're not the problem. The information pipeline is the problem. And that means the fix isn't about trying harder. You're already doing that. It's about redirecting where your effort actually goes. Start here. Pick one reliable source, and stop treating every finance creator on your feed like they're equally credible. Look for actual credentials. A licensed advisor, an accredited educator, someone with a track record you can verify, not just someone with good editing and a trending audio clip. One trustworthy source you check consistently will teach you more in a month than 50 random 15-second videos will teach you in a year, because you'll actually be able to build on what you learn instead of collecting disconnected fragments. Second, talk to someone in your family. This one might surprise you, but the data backs it up. Gen Z actually trusts family members more than any other source when it comes to financial advice, more than financial professionals, more than social media. 50% of you say a family member is your go-to. So the trust is already there. What's missing is the conversation. Most families talk about money in vague terms. Save more, be careful with your credit card, instead of specifics. So ask specific questions. Ask how they actually built their emergency fund, not whether you should have one. Ask what they wish someone had told them about credit before they got their first card. Ask about a financial mistake they made and what it actually cost them. Specific questions give you specific, usable answers. Vague questions get you vague, useless advice, even from someone who genuinely cares about you. Third, open a budgeting app today, right now, before you finish watching this. Not because tracking every dollar will instantly make you financially literate, it won't, but because building the habit first, before you fully understand the theory, is how real change actually sticks. Knowledge without a habit attached to it evaporates. A habit, even an imperfect one, compounds. Roughly 45% of people already use some kind of money management tool. Join them. Automate what you can, savings transfers, bill payments, so that good decisions happen by default, not because you had to remember to make them on a stressful day. And here's the last thing, maybe the most important thing. Insurance risk, the boring stuff, don't wait until you're forced into it. Spend 20 minutes, just 20, actually reading through what your health insurance covers, or what renter's insurance would cost you, or what a deductible means in practice, not in theory. It's not going to trend. Nobody's going to like the video. But it's the one category where being uninformed doesn't just cost you money. It can cost you everything, all at once, the one time you actually need it. None of this is your fault. Nobody sat you down and taught you this. The classes that exist now, mandated in more states than ever before, came too late for most of you. You'd already graduated by the time they showed up. The people you trusted most for advice weren't always equipped to give it, through no fault of their own. And the platforms that filled the gap were built to keep you watching, not to make sure you understood what you were watching. But here's where it stops being not your fault. From this point forward, now that you know the gap exists, closing it is on you. Not because you failed to notice it, you didn't. You're watching this because some part of you already suspected something wasn't adding up. But because you're the only one who can decide, starting today, to stop treating financial knowledge as something that happens to you through an algorithm, and start treating it as something you build, on purpose, one verified fact and one honest conversation at a time. You don't need to fix all of this today. You don't need to understand insurance and investing and credit and taxes by tomorrow morning. You just need to pick one thing from everything you just heard, and do it before you close this app. That's it. That's the whole ask. One real source. One real conversation. One habit started today, instead of postponed again. Because the generation before you didn't have better information. They just had fewer places to get bad information from. You have more access than anyone in history. The only thing left is deciding to actually use it.